Okay, let's kind of jump on to the second intraday system, and the system which we call it as momentum with RSI. Momentum with RSI. So what is RSI? We've already spoken about that in the indicators. If you don't remember it, go back to that video once again, revise that and come back in here. So RSI stands for Relative Strength Index. It's known for its momentum. So now how do we use that RSI and how do we trade with that? This system is extremely powerful, and this system is can be used at various time frames. So now if you use it at the lowest time frame, it becomes an intraday. If you use slightly at the middle time frame, it becomes swing, and the longer time frame it becomes positional. So this one system, we will do it across different styles of trading. So pay attention to the system. This is a very famous system, and many of them use this, and very popular system as well, and this works brilliantly. So kind of see how to kind of make use of this system and kind of maximize your trading profits, right? So now ingredients: you need technical chart, and then candlesticks, RSI, and then you need 15 minutes, 60 minutes, daily and weekly time frame charts. So you should be able to go through multiple time frame charts, from one another to kind of set it up, right? But the trading, all the trading will happen in either 15 minutes time frame or 60 minutes time frame. Choice is yours. Which one do you want to do? Either you want to do a 15 minutes time frame or 60 minutes time frame. Don't keep jumping from one another, and don't keep comparing that you started with 15 minutes or 60 minutes is working better, or you started with 60 minutes, 15 minutes worked better. No, do not shift that. Do not do that. Once you decide, you got to be in that time frame for this system for at least 3 months. Only then you change it. Otherwise, don't ever get into that and keep mixing it up. It kind of completely spoils the whole trade. Now, what are the execution rules? So the setup is pretty simple. Let me kind of maybe show you that before I kind of really set it up, before I kind of give you the execution rules. So in studies, we don't need any of these moving averages. We need RSI. So by default, you get RSI here, RSI and 14. That is the default, right? That's all you need. RSI and the candlestick charts, and then multiple time frame. You will have to go to say 15 minutes. You have to look at 15 minutes what's happening to RSI. You will have to go to 1 hour and see what's happening to RSI, whether it is above 60, below 40, what it is. Then you have to look at it on daily time frame and look at it on weekly time frame. That's how you kind of really look at it on multiple time frame. So this is the setup. That's all. Very simple chart setup. RSI and candlesticks. Now let us understand the execution rules for long of the 3 time frame, whichever you choose. Now when I say 3 time frames, if you are doing it in 15 minutes time frame, listen to this carefully. If you are doing it with 15 minutes time frame, the 3 time frames will be 15 minutes, 60 minutes and daily. Once again, if you are doing it on 15-minute time frame, if you are trading on 15 minutes time frame, you will look at the 3 time frame which you will consider is 15 minutes, 1 hour or 60 minutes and 1 day time frame. These are the 3. If you are doing it on 60 minutes time frame, you will, the 3 time frames you will consider is 60 minutes, 1 day and 1 week. 60 minutes, 1 day and 1 week. So once again, for 15 minutes it is 15 minutes, 60 minutes and 1 day. For 60 minutes it is 60 minutes, 1 day and 1 week. Those are the 3 time frames you will use. Now for going long of the 3 time frames, whichever you have chosen, the RSI in the 2 higher time frame should be above 60. We have discussed RSI above 60, below 40, between 40 and 60, all of that we have described in the previous learning indicator description. So the higher time frame, and if you do 15 minutes time frame, the 60 minutes and 1 day time frame, in that RSI should be above 60. And the lowest time frame, which is the 15 minutes time frame, if the RSI is at 40, 40 and raising, at that point in time, if you find a strong bullish candle above the bullish candle, you will buy. Very, very simple. So let me kind of explain that maybe through a chart quickly. So let us say this is the price chart, and this is here the RSI. Let us say this is 60 RSI and this is 40 RSI, right? So let us say this is you are going to trade in 15 minutes time frame. 15 minutes is what you're going to trade. So if you're trading in 15 minutes, you have to check 15 minutes, then you have to check 60 minutes, and then you have to check 1 day. These are the 3 time frame, 1, 2 and 3 time frame you're going to check. So first what you will do is, first you will go to 1 day time frame. 1 day time frame and see the stock. If this is 60 and this is 40, RSI should be comfortably above 60. You see here, this zone is above 60. So once it is above 60, you come here and find out the date. So say for example, this is so I will say 21st September to say 31st, or it is kind of continuing. Let me not put the end date. So 21st September onwards, it is kind of completely above 60 RSI on daily time frame. So once you have noted down that, what you will do is, next you will come to 60 minutes time frame. 60 minutes time frame, and you will look for the same RSI to see in 60 minutes time frame from when is it above 60. So from when is it above 60? So this could be here it started from 21st 9. So here in this time frame you will see this could be after 21st 9, because the first criteria is that even on 1 day time frame it is to be above, and then 60 also it should be above. So after 21st 9 you will see where it has been above. So you will notice that it is comfortably above from say 30th 9 onwards. It is above. When you're just kind of checking this, if it is above, then you will come and look at 15 minutes time frame. In 15 minutes time frame, you will look at the same RSI and see here where RSI is come like this. This is 60 and this is 40. It has come like this and trying to go up like this. Now this is your opportunity. When this happens in RSI, price at this point in time, it would have come like this and it would be tending to go up in 15 minutes time frame. At this point you should have if you find a strong bullish candle. We have spoken about candles as well, and we have told you what are the kinds of candles. If you find a very good strong bullish candle, after the first 15 minutes candle is formed like this, above this is what you will buy. This is the setup. So why are we doing this? Because 1 day is above 60 and 1 hour is above 60, which means higher time frame always rules. That's one of the rules in stock market. Higher time frames always rule. So if the higher time frames are stronger, when the lower time frame comes below to 40, it will pull it back up, and when it pulls back up, along with that you can ride your trade, and then after that the trade may kind of go up like this, and this much is what can be your profit. From here market kind of go up, and then you kind of get this profit straight. So this is on the long trade. Let us kind of also look at the opposite of it, short. In short, what we need is same 1 day, then we have 1 hour or 60 minutes, and then 15 minutes, right? So if I kind of break that into 3, what do we need here? Here we need the RSI. If it is 60 and 40, here the RSI has to be below 40. It should be below. And even here also, if this is 60 and 40 RSI, here also RSI has to be below 40. And here in 15 minutes, that is the trading time frame, if the RSI has kind of come up and it is at 6, this is 60, and if this is 40, it has come here and slightly turning back like this. At this point in time, the price chart will be kind of gone up like this and now trying to come back down, and here there will be a red candle. There will be a strong red candle. Below that you sell. Below that you short the market. Pretty simple, straightforward. You get this trades, enormous amount of trades, especially in 15 minutes time frame. If you want, alternatively, you can even look at 1 week, 1 day, and 1 hour, and trade in 1 hour. It's a very beautiful setup, phenomenal setup. You get numerous amount of trades, lots of trades, consistently you can do. And this one kind of really works good, and it has got a very good success rate as well. Of course, here also you'll have, maybe here success rate is slightly around 40 than 30, so you should kind of explore this kind of trade. So now let us kind of run through the execution rules again. For long and for short, we kind of describe that. Short of the 3 time frame, RSI in the 2 time frame should be below 40, and in the lowest time frame, if the RSI is at 60 and kind of going down, that is when you will short the market, right? So exit long or short position before the end of the day if the trade is still active. So because you're going to do it on intraday time frame here, if you get this chance in the morning, take that in the morning. By end of day, just exit, especially 15 minutes time frame. 1 hour time frame, if you get this chance, say at 2 o'clock in the afternoon, if you get it in the morning, take it. By the end of the day, exit, even 60 minutes time frame. Say sometimes if you get this opportunity, say at after 2 o'clock or 2:30 or around 3 o'clock, you get this opportunity, you can do a BTST or STBT, which means you can take this trade and carry forward to the next day, and based on how the things happen next day, you can square off your position. So that's an advantage of 1 hour time frame. You can kind of really do BTST. So that is what the exit are. And the risk management rules are: initial stop loss will be low of the signal candle. So what is the signal candle? Let me kind of explain that once again through the chart. Say in 15 minutes time frame, you have the price here and the RSI here. So 60 and 40, let's say for long trade, here the RSI is kind of come like this, and it is kind of trying to go up. Exactly at that point in time, the price is kind of come up and tending to go up, and at this point in time we need a strong bullish candle, and we said above this we will go long, right? Now this is after this, the next candle, if it will form like this and it will kind of go like this. So in this candle we will go, this is the entry candle. This first one, which is a bullish candle, this is the signal candle. So now your initial stop loss is low of this signal candle. This is your stop loss. This is where the stop loss happens. So that is the signal candle. This is for long trade. Opposite of that is so market is kind of going up like this, and right here you have a bearish strong candle, and RSI is at 60 and kind of coming down. So you will short here and your stop loss will be here. So the next candle, you would have got a entry something like this. So this is the entry candle and this is the signal candle. So signal candle low is your stop loss for a long trade. Signal candle high is a stop loss for your short trade. So low of the signal candle so I just mentioned low for the long trade. For the short trade, it is high of the signal candle. Low of the signal candle for long trade and high of the signal candle for the short trade, as the case may be. Very, very simple. And once after that, if the trade goes in your direction, what do? You trail candle by candle. If it is long trade, subsequent candle low, raise that stop loss. Then next one, raise it to the next one, raise it to the next one, and keep trailing accordingly for long. And for short, come to the high of the subsequent candles and keep trailing. And sometimes if it comes back up and hits, in the day itself you have to exit, and whatever profits you get, you take it. If it is a loss also, you take and go. If till the end of the day nothing happens at 3:30, before 3:30, say 3 o'clock, 3:15 is the latest, 3 o'clock itself, exit, close your position, take the money and go home. That is the system. So this is ID2, momentum with RSI. So if you got this second system of intraday, type in the comment, got momentum. Awesome. I'll see you in the next video. We'll talk about the third system in intraday. Bye-bye.